So good morning, everyone. This is Kathy Tate from the Chamber of Commerce. Thank you so much for taking the time today to join our webinar. Without a doubt, these are incredibly stressful and challenging times. And our goal with the webinar is to help you navigate some of these government programs, which seem to be coming out almost daily and changing just as fast. Thank you especially to the team at Grant Thornton for offering their expertise and assisting members through this very confusing environment. So the federal government has announced financial aid totaling about $107 billion so far for the COVID-19 pandemic. A large percentage of this total is in the form of tax deferrals. Our presenters today from the Grant Thornton team include Darryl Paul is a chartered professional accountant and also a partner at Grant Thornton. Located in Barrie, Darryl has the pleasure of advising many owners and managers throughout Simcoe County on how they can structure their business and personal affairs to minimize the impact of taxes. Second on the panel, we have Joel Rumney, also a chartered professional accountant and a partner at Grant Thornton. With a wide range of experience from a mid-sized national firm to small local firms, and now to the Grant Thornton's Midland office, Joel has worked with companies of all shapes and sizes. We're particularly grateful to Joel as he also serves as the treasurer for the Southern Georgian Bay Chamber of Commerce. And last but not least on the panel, Norie Ventura is manager of cloud accounting services at Grant Thornton. Norie has over 25 years of bookkeeping and accounting experience serving small and medium-sized owner-managed companies. So without further ado, I'll hand the reins over to the Grant Thornton team, and we're looking at about a half-hour presentation followed by about a half hour for questions and answers. So thank you so much, Grant Thornton.
Thank you, Kathy. Good morning, everybody. This is Darryl Paul. I'll jump right into it. There's a lot of information that we want to cover this morning. Our title of our presentation here is Enduring a Global Pandemic, the latest government support and other business considerations. A lot of what we talk about is going to be focused on the government support piece. There's just so much to cover there. And if time permits, and maybe during the Q&A session, we'll get into a little bit more on the other considerations. So, just a quick disclaimer. Obviously, things are changing pretty quickly, and we're doing our best to stay on top of things and to communicate accurate information and clear information to you. But do keep in mind that things are changing on a daily basis. At Grant Thornton, our purpose is to help our clients, colleagues, and communities thrive. Here's a little bit about our three presenters today. We can certainly circulate these details at a later time if you wish to speak with any of us directly. So again, just from an agenda perspective, going to cover federal measures, provincial measures, and then get into some Q&A. So at a high level, the government announced a three-point plan to help protect jobs, and that's mostly in the form of the Canada Emergency Wage Subsidy, to help those that lose their jobs, which is again mostly in the form of the Canada Emergency Response Benefit, and to help businesses, which encompasses everything, but also the guaranteed loans that have been announced, and we'll address all of these topics. So I'm going to speak specifically about the Canada Emergency Wage Subsidy. This is the main purpose of this program is to offer a 75% wage subsidy to all businesses, nonprofit organizations, and charities to enable employers to retain and rehire employees that were previously laid off, all with the goal of being able to make sure that those employers are more easily able to resume normal operations once this crisis comes to an end. Now, I'll just start with some of the highlights of this program, and I'll get into more of the details. But the legislation just came out on the weekend for this. It's a very complex set of legislation. It includes a number of anti-abuse rules meant to keep people honest, and it actually includes an ability for the government to extend the duration of this program out to September 30th of 2020. It's currently slated to end on June 6th, but they just do have the ability to extend it should it be required and without having to recall Parliament. And continuing in the anti-abuse measures, it also gives an interesting power to the government to make public the name of any person who abuses the program. So while this may be considered unnecessary, I think again it's all about keeping people honest, and not a big fan of the name and shame approach, but I think the general consensus is that they want people to approach this honestly. Now, one of the downsides that we've also learned is that the funds are not expected to be available for another 2 to 4 weeks, which is not exactly hitting people's current cash flow needs, but better late than never, as they say. And another positive that came out of it is that once an employer qualifies for a particular period, they will automatically qualify for the following period, but not every following period, just the immediate next following period. So if this continues to go on, it'll just be you'll still have to regularly qualify, just not for every period. And another point I just want everybody to keep in mind is that this wage subsidy, it is government assistance, so any amount you receive from it will be taxable to the recipients. Okay, let's get into some more of the details. So the criteria in order to qualify, an applicant must be a business, which can be self-employed, partnership, or corporation. It can be a nonprofit organization or a charity. Now, the revenue test, the decrease in revenue test, is the one that's gotten a lot of attention. And what's come out in the latest round of discussion and the legislation is that now you're going to have to demonstrate a drop in revenue of at least 15% in March, and it must be a 30% drop for the following months, so which are currently April and May, but as I said, there may be the ability to extend it. And that's comparing your revenue drop to the same period in the previous year, so the same month of the previous year. Now, your revenue here for this purpose is calculated using your normal accounting method, and it excludes any extraordinary items and amounts that are on account of capital. So when I say that, I mean when you've sold assets or investments, the proceeds from those sales are excluded from the definition of revenue. Now, if you're in a multi-company setup where you have other non-arm's length parties that are having intercompany sales, there is a new rule that allows for the computation of revenue on a consolidated basis, which allows companies where you may have sales in one company but the employees are in another. It allows you to aggregate those and get the benefits on a consolidated basis. And your revenue can also be computed either on a cash basis or an accrual basis, but not a combination of both. You need to select which method provides you with the best benefit and then remain consistent for the duration of the program. So if you've got the luxury of being able to have a bit of time to wait here, you can do so. You can take some time to let the numbers kind of work out how they will, and then figure out, is cash basis better or is accrual basis better for getting you this benefit for more periods. Now, one of the things the government did do is it announced an alternative revenue benchmark, which allows you to, instead of comparing to the same month of the prior year, you would have the option, and this would be for newer businesses or for businesses that are in high growth mode. You can compare January and February of 2020, so the average of revenue in those months to the current March, April, May periods. And you still would need to meet the same 15 or 30% decline test, but it's just using a different period, which may benefit some companies. All right, so this table, this is just a table that kind of summarizes all of the criteria that we just talked about. Maybe an easier way to digest the information. Period 1, 2, and 3 are just March, April, and May. And then the claiming period refers to the dates that the remuneration was paid in. Again, the reduction in revenue for each period, as I mentioned, 15%, and then 30-30, and then the eligibility periods in the rightmost column. Okay, so now that you know whether or not you would qualify, how much would you qualify for? So the amount that you would qualify for is calculated as the least of 3 amounts. So this let's speak about this generally first, and then I'll come back to an exception. So it's the least of three amounts, being first amount being 100% of the eligible remuneration paid in the week, and then it would be the next one would be 75% of the baseline remuneration, and baseline remuneration is the average of your, I guess, essentially your pre-crisis remuneration. So that's the period from January 1st up to March 15th. If you look at the average weekly remuneration for an employee for that period, that forms their baseline remuneration. And then the third is $847. So you can see from this that you top out at 847, but it may be reduced based on one of these prior items. Now, the one point I will make is for any employee in the first bullet point there, any employee that was hired on or after March 16th, that first test is essentially just 75% of the actual remuneration that was paid. The way this all works out is it allows for individuals whose pay has been reduced since the crisis has occurred to use as the basis their pre-crisis remuneration as the basis for their salary, rather if that exceeds what they're currently being paid. So it gets a little bit technical, but there is a method to it. And I guess one of the other requirements here is that businesses are supposed to make their best efforts to pay the additional 25% of wages over and above what the government subsidy is, but it's not mandatory. So, certainly people are taking advantage of if they really need to save that cash from a cash flow perspective, but it is encouraged to top your employees up to the maximum amount possible. One new thing that was added in addition to the wage subsidy that had been talked about, is also this ability to get 100% refund of employer paid contributions to EI, CPP, and Quebec pension plans for any employee who's on leave without pay, for which the employer is eligible to claim the Canada Emergency Wage Subsidy. So now, how would you apply for that? This is all going to be applied for through the CRA's My Business Account portal, and funds will be received by direct deposit. Now, there may be the ability to elect to receive it by check, but that's going to slow down the cash flow. So direct deposit definitely would be your wisest option to get the funds quickly. And you would apply for both the CEWS as well as the payroll benefit refund at the same time and through the same method. Now, the application process is not yet available. It's more information is going to be coming on that in the coming days. We wouldn't expect it to be too much longer, but just know that it's not currently available. Let's work through a simple example. I won't spend a lot of time on this because everybody's examples are going to be very different and not always as simple as this, but just to give you a concept for how this works. So imagine you have 10 employees in March. 5 of these employees earn $4,000 a month, and the other 5 earn $7,000 a month. What's the subsidy that's available? Well, we work through that real quick. If you have 5 employees at $4,000 a month, that's each of them is going to be on a $48,000 per year salary. That's under the maximum amount that qualifies under the subsidy, which is $58,700. So the full salary is going to qualify. So the amount of the subsidy is going to be $15,000 for these employees, which is calculated as $4,000 per month times 5 employees at 75%. Because you're paying each of these employees, or because the payroll burden for each of these employees is $20,000 a month, subsidy is $15,000, the employer cost is going to be the remaining $5,000. For the other employees, you have 5 other employees that are at $7,000 a month. Follow the math through. Basically, the subsidy ends up being capped at $16,940, and the employer cost is $18,060. So what does this all mean? For employees or employers with a normal payroll cost of $55,000 in this case, government's going to subsidize almost $32,000, and the employer is going to have to pay a little over $23,000. Just to help you wrap your head around how much is available. Now, there were some items in this subsidy program that were really unclear at the start. I'll just touch on these really, really briefly. So would non-arm's length salaries, individuals so salaries to individuals who are either shareholders in the company or related to shareholders, would those be eligible for the program? Yes, they are, but only as long as those employees were employed prior to March 15th. And then the same calculation applies. Will there be any documentation required to support the decline in revenue? At this point, no. It appears that you just need to do to attest to the decrease when you make the application. But you would want to keep your documentation on hand of how you determined you were eligible, because there is going to be a bunch of audit activity around this, and we want to make sure that you keep your records of how you determined the amount that you were eligible for. Are there any fines, penalties, or consequences? Absolutely. There are many and significant, but I think the most important thing to realize here is that they're meant to punish people who are knowingly abusing the system, not to go after people who've made honest mistakes. And how does the temporary wage subsidy program kind of merge with the Canada Emergency Wage Subsidy? Essentially, that 10% program, if you've taken advantage of that, it essentially just reduces the amount that you're eligible to claim under the Canada Emergency Wage Subsidy. And finally, one of the questions was about how are startups going to be recognized and handled under this program? Well, the alternative revenue reporting that I mentioned earlier, basically allowing you to look at the average of your January and February revenues for 2020 as your comparison for March, April, and May. That's what's been brought in to address those. So hopefully that helps clear up some of those issues. I'm now going to hand it over to Joel, and Joel is going to talk about some of the other programs. Thank you.
Thanks, Darryl. I'm going to talk about a few things here. Darryl just briefly touched upon the 10% temporary wage subsidy, but I'll also touch upon the loans that are available and some of the deadline and payment deferrals, both federally and provincially. So starting with the temporary wage subsidy, it's better known as the 10% subsidy. It was first announced back in towards the end of March, received royal assent, I think, on the 25th. But we sort of paused at that moment because we didn't know what the 75% wage subsidy looked like. It seemed to change daily. So at this point, it seems like a lot of the information that's coming out has slowed down, and we may be near a point where we can properly advise clients and business owners can start to understand how to work with these rules. So the way this program works is the temporary wage subsidy is quite a bit different than the 75% subsidy. So it is a reduction of the source deductions that get remitted to CRA, either on a monthly basis or, as we'll talk about, can be done later on in the year as well. So in terms of businesses that are eligible, so CCPCs, as we call them, which is just really most small businesses that are incorporated, that are eligible for the small business deduction in the prior year. Individuals, so sole proprietorships would be the most common. Partnerships, nonprofit organizations, and registered charities. So we'll get into how this program works. So because it is a reduction of source deductions, or a portion of the source deductions, the employer starts with the calculation of the source deduction remittance, or it could be the third-party payroll service provider. And from what I understand, some third-party payroll service providers will be assisting with the calculation, and some will not. And I'm sure if you have a payroll service provider, they've already reached out to you about this, hopefully. So it's 10% of the employee remuneration, which is typically gross wages, is manually calculated, and it's up to a maximum of about $1,375 per employee, and $25,000 combined for the employer. So once you've run the 10% calculation, that's the amount of the wage subsidy. As the employer, you'd still withhold CPP, EI, and income tax from your employees. But when you remit the source deductions, you would reduce the income tax portion of the source deduction remittance by the amount of the 10% wage subsidy. So it's important, if you're going to, we'll see here at the end of the slide here, that you can hold off, and you can wait till the end of the year or ask for the subsidy to be applied to remittances in the following year. so into 2021. It's important to know that it could take some time if you hold off to make this claim, because you can't, you can't have, say, $1,000 of income tax withheld at source and be trying to claim, say, a $1,500 10% wage subsidy. You can't have a negative number and try to make the claim when you file your remittance. So you certainly have to track the dollar amount if you're going to hold off and make a claim later on in the year. So this is the eligible period is payroll between March 18th and June 20th. And it's important to note, and I think it's the same with what Darryl was speaking about with the 75%. We're really talking about remuneration that was paid. We're not talking about remuneration that your employees earned, but was paid outside of this period. And so again, you can, today's April 15th, it is a filing deadline day for source deductions for a lot of employers. If you had employees between March 18th and the end of March, you could be doing the calculation today if you're sending in source deductions, but other than trying to reduce cash outflows, you can hold off until next month or months following. So as Darryl briefly mentioned, we were waiting on any details on the interaction between the 10% wage subsidy and the 75%. We didn't know if by claiming the 10% wage subsidy, we would be giving up the 75% wage subsidy. But we now know that if an employer claims the 10% wage subsidy, it just reduces the amount that you would otherwise be entitled to under the 75% wage subsidy. So a suggested approach to both wage subsidies, now that we know what we know after this weekend, is to claim the 10% wage subsidy now. And of course, when we talk about these wage subsidies, we have to have employees. It can be the employer, it can be the family members of the employer, it could be unrelated staff. But if you do have payroll, I suggest you claim the 10% now or soon. But hold off, cash flow, permitting, to hold off on the 75% to ensure that you understand it and you're making the right choices. Because as Darryl mentioned, a lot more details came out over the weekend. So we now have the ability to look at January, February, the average of those months, rather than looking at the month in the prior year. We also have the ability to look at cash basis revenue versus how we typically report. And once we opt into these elections, we're stuck with them. And as you see in this last point here, the minister has the ability to carry the program on at 75% until the end of September. So I know a lot of business owners are looking at March right now, and they're certainly halfway into April, and want to claim the subsidy when it comes out, which looks like it's going to be May. But I think we really need to be pulling together information right now on the prior year numbers for March, probably up to September, to see what those numbers look like. And nobody can anticipate the next several months better than the business owner in terms of how busy anticipate things being, and was the phone ringing. Right? Because if we lock into March and April under one of the elections, we may not be eligible, in May. We may not be eligible in June to September if the program carries on. So I think it's time for pause, and it's time to evaluate the options to try to maximize the 75% wage subsidy. Moving on to loans. So the Canada Emergency Business Account, this is better known as the $40,000 interest-free loan to small businesses and not-for-profits. So this has nothing to do with Canada Revenue Agency. So this is directly with your financial institution, so either your bank or your credit union, and it's in cooperation with Export Development Canada. So to qualify, you require payroll in the prior year between $50,000 and $1 million. And to qualify, when you go onto online banking, you have to provide the box 14 figure from the 2019 T4 summary. There's been a lot of discussion in the media about companies that either don't have payroll, perhaps a sole proprietorship, or their payroll is just under 50,000 or just over $1 million. I know there's some business owners waiting to see if that changes, if there's some flexibility there. but I don't think at this point that there's a way around it. You do need to plug in the box 14 figure from the summary to apply. And certainly the bank at that point has that information, and that can be quickly compared to CRA records for the T4 summary and slips that were filed. So the way it works, if you're eligible and you receive the $40,000, I understand you receive it quite quickly. There is a 25% debt forgiveness, and it's up to $10,000. So there's an important point to make here. So certainly the one widely understood requirement here is to receive the debt forgiveness, you have to repay in full by the end of 2022. But what's not understood yet is January 1st of next year is a really important date. And I know at least one bank out there was suggesting that, you know, business owners start to repay the loan as soon as cash inflow starts to occur, which is great for managing the balance sheet. It makes a lot of sense, but this loan is quite a bit different. So what I would suggest is don't make, if you're eligible and you receive the $40,000, don't make any payments this year. You can start making payments January 2nd, because January 1st is a date that they're going to look at the balances outstanding. And if you've made any payments, you could be receiving less than $10,000 in forgiveness. It's really it's 25% of the balance outstanding January 1st. So that's what they mean by up to $10,000. So if you receive the $40,000 and business picks up, I would still leave the $40,000 outstanding for the balance of the year. There's other loans that have been offered, the new loan guarantee and new co-lending program for small to medium size enterprises, up to $6.25 million. So both backed by Export Development Canada and EDC. Now, I haven't received any feedback for any companies trying to apply for credit lines under these new programs. My suggestion is whether you qualify for the $40,000 or not, you don't want to wait until you're into a cash flow issue to start having the conversations with the institutions. They usually require information like historical financial statements. They may want cash flow projections moving forward, and that takes quite a bit of time in a good year when we're all working and we're able to get at our information quite easily to provide the information to the bank. So I suggest making calls now, projecting out into the future, or asking for help on cash flow forecasting from your advisor to at least start these conversations. And keep in mind, if you think you might need a loan, if things pick up and you do well and you don't need the loan, if it's a flexible revolving credit line, you're not paying any interest, but you have it available. So at least start the conversation. So tax deadline extensions. So there's several deadline extensions for corporations, trusts, partnerships, and individuals. So in some cases, it's both an extension of a filing period, but it's also an extension of payment. So for corporations, there's a filing extension for corporations that have tax returns due between March 19th and the end of May, so they can file by June 1st. I think what's more important is the balance due and the installment extensions. So September 1st is a key date, as we'll see through the next couple of slides here. So what I'm recommending for corporate clients and sole proprietors as well, and even those who are just filing a personal tax return and have a balance owing, if the balance is due after March 18th, so one example is a December year end. So most December year ends would have a March 31st payment deadline. You can hold off making that payment until September 1st. And any installments owed after March 18th up to the end of August, you can also pay those installments September 1st. January and February, in that example with the December year end, those installment payments would still be due, but anything due after March 18th, you can certainly hold off on. I think it makes a lot of sense to hold off for a number of reasons. It's really like an interest-free loan, but this is a much different year for business owners, much different year for everybody, but certainly for the business owner. I mean, we need to recognize that the prior year, the success of the business and the profit and taxable income is what drives the installment requirement for the next year. This is a different year, and profit may not be the same. right? So I think mid-August is probably the time to start having the conversation with your accountant to say, hey, can we look at the books? You know, what might I owe for this year? And what should I pay starting in September? But I think it's important to just hang on to the cash and keep it in the bank account. You know, if you have a loss for the year, or if the income's down quite a bit, CRA is not going to write you a check back if you need it in the fall. So I think it's best to hang on to the funds. Individuals without business income, so basic personal tax returns. So there's a filing extension to the 1st of June. And again, September 1st is the balance due payment deadline now. So best to hang on to your funds. June 15th installments, that installment deadline is pushed to September 1st. So again, I wouldn't make a payment now. Individuals with business income, they've always had a June 15th deadline for their spouse as well. That's unchanged. And they have the same September 1st payment deadline. Trusts, March 30th is typically the date that they're to file. That's extended to May 1st. And same balance due date and installment due date of September 1st. Partnerships, those filing deadlines were pushed to May 1st as well. And charity returns also due now at the end of the year, which I think will be helpful for a lot of charity employees who are at home. GST, HST, it took a little while for the federal government to agree to pushing the deadline. So we now have a June 30th deadline for payment. So I suggest you still file on time. Just know that you don't have to pay a balance owing until the end of June. Certainly if you're in a refund position for any of your HST filing periods, it's best to file as soon as possible. Collect the money back from CRA and hang on to the cash. So monthly filers, this June 30th period applies to February, March, and April periods. For quarterly filers, it's your 3-month period ending February, March, and April as well. It's important to note for annual filers, same 3 periods that we're talking about with February, March, and April, but it also includes the installments that are due for March, April, and May 2020. So you don't have to pay until the end of June. For Ontario, they announced some provincial measures towards the end of March as well. Some for families, certainly for businesses as well. Employer health tax. So there is an exemption for employers up to $490,000 in Ontario. So if you don't know what employer health tax is, it's likely because your gross income or your gross pay to your employees for the year is under $490,000, so you're exempt. There's an increase this year, retroactive back to the beginning of the year, up to $1 million. This is for private sector employers with payroll under 5 million. And the exemption will roll back to $490,000 again starting next year, unless that's changed at some point this year. Yeah, so there's an expected savings for some employers of up to $10,000. That would be the maximum. There's also deferral of property tax reassessment. So we're talking about the values placed on properties by MPAC towards the calculation of property taxes. So there's a deferral. So rather than changing it for 2021 to increase property tax payments, it's going to be the same as 2020. WSIB premiums for employers, payments are deferred 6 months up to the end of August without penalties or interest, and that's for all employers. I think we're all aware of the electricity relief for off-peak pricing. And there's also finally some parental support. This is not an income tested benefit. So whether you have kids yourself or grandkids and you want to spread the word to your children, they can make a claim online quite easily. So for those who have kids 12 years old and under. So not income tested by any means. So if you have no income in the year or a lot of income in 2020, it really doesn't matter for this benefit. And some other some other provincial tax payments where the payments have been pushed off to the end of August, including the EHT. So this would include any gas stations and brokerages, insurance brokerages as well. So at this point, I'll hand the presentation over to Norie. Who'll take us through another program, and then we'll get into the question and answer period.
Thank you, Joel. Good morning, everyone. In response to COVID-19, a new program called the Canada Emergency Response Benefit, referred to as CERB, was established to assist individuals. Its major purpose was to provide financial support to employees and self-employed, referred to as workers, who lost their jobs due to reasons related to COVID-19. Something that you will see in regards to CERB is usually the benefit is related to COVID-19. So there's a connection there. Workers that are sick, quarantined, or taking care of someone that is sick with COVID-19, as well as working parents who have to stay home without pay to care for children who are sick or at home because of school and daycare closures. The CERB replaces what was previously announced as the Emergency Care Benefit and Emergency Support Benefit. The criteria basically applies to a worker that is at least 15 years of age, a resident in Canada. In the 12 months preceding the date of application, the worker had at least 5,000 of employment or self-employment income. Keep in mind, dividend income could count towards the $5,000 income requirement to be eligible for the CERB, as long as the dividends are non-eligible dividends. The worker ceases working for reasons related to COVID-19 for at least 14 consecutive days within the 4-week period in which they've applied for the payment. The CERB is not available to workers who are still receiving employment or self-employment income in the period they cease to work. So I'll stress that, no income. You must have stopped working as a result of COVID-19 and be without employment and self-employment income. And another reason, disqualification or where CERB is not available is the employee quits their employment voluntarily. The amount is a flat amount determined by the minister, and it's a taxable amount of $2,000 per month for up to 16 weeks. As far as I know, there's no requirement to repay if the recipient income exceeds a certain threshold when they're filing their 2020 T1. However, keep in mind, anyone who receives more of this benefit than they're entitled to will be required to repay the excess. So obviously, you know, after 12 weeks, if you've gone back to work and you've received the benefit for 16 weeks, you'd have to repay. The benefit period is from March 15, 2020 to October 3rd, 2020. If you stopped working before March 15th and you became eligible for EI regular or sick benefits prior to March 15th, your claim would have been processed under the pre-existing employment insurance rules. To apply and to access the benefit, you can apply through CRA, specifically my CRA account, which you would have registered for, or over the phone, and the government provides 2 numbers, 1-800-959-2019, 1-800-959-2041 is numbers you can call to apply. The minister may ask for information in respect of the application, but there's no supporting documentation needed. Obviously, the benefit is set up to make it as simple and easy to apply. EI versus CERB, well, all workers that meet the criteria are eligible for CERB, where they are whether they're EI or not eligible. Hence, you don't need a ROE form, for example, when applying for CERB. Access to cash is quicker under CERB, especially if you sign up for direct deposit. I've heard where someone applied on a Monday and got their funds within a day or 2. But if you don't, then a check will be mailed, and you know, CRA is saying 10 days, up to 10 days. You do, however, have to reapply every 4-week periods to receive the benefits. So keep that in mind. www.canada.ca is a great resource to find exactly what those 4-week period cycles look like. The second cycle is April 12, 2020 to May 9th, 2020 right now. So you would have to reapply, and now would be the time, starting April 13th, you would reapply for that period, 4-week period. As of April 6th, if Canadians are already receiving EI benefits, you don't have to apply for CERB. If EI benefits end before the end of the CERB program, and you still can't return to work after that 16-week period, after the EI benefits, then you can apply for CERB. And if workers are still eligible for EI benefits, then they can access their normal EI benefits after the 16-week period covered by CERB. But make sure you now have the documentation that's eligible for EI benefits, which would mean an ROE. So make sure you have that information. This concludes the presentation, and I'll now hand it over to Kathy as we enter into a question and answer period.
Thank you so much, Darryl, Joel, and Norie. Wow, that's a lot of information that you've clarified. And just to let everybody know, we will be sending this slide deck out following the presentation if you want to review it. So we do have a couple of questions. The first one I'll send out to the team. Do you think that we will be able to file for the Canada Emergency Wage Benefit on behalf of a client, or is this to be confirmed?
Yeah, hi, it's Darryl. I'll take that one. At present, all that's been announced is that you'll be able to apply through the CRA's My Business Account portal. No reference to being able to apply through represent a client on behalf of a client. So I would say right now, I don't think that's going to be the case, but again, since all it says currently is that more information is going to be coming available soon with respect to the application process, this is one of those items that could change.
Thank you very much. And for all the participants, in case you didn't know, I think you can hover over on the right-hand side and type in a question if you do have something for the team. We did have 2 pre-submitted questions. The first one being, what is the provision for new business which opened before March 2020, but payroll is less than 50,000?
Yeah, so I'll jump in, Joel here. So it sounds like it's a question related to just with the $50,000 threshold mentioned there, related to the $40,000 loan, the interest-free loan. And this is where the frustration starts with a lot of business owners, new businesses, or those businesses that have paid dividends rather than wages. Nobody could have imagined it would be where we are now, right? We can't plan ahead. So the way it reads now is, you need that box 14 on the 2019 T4 summary to apply for the loan. In fact, when you log into your online banking online, you can't get past that step. So it's yet to be seen whether there will be any flexibility. There are certainly a number of sole proprietors that do not have payroll accounts with CRA that are raising some noise on this. So I think my advice is just to stay tuned. I don't think you can access the $40,000 loan right now.
Thank you, Joel. And another pre-submitted question, when can we actually apply for the wage subsidy?
Yeah, this is Darryl again. I think I mentioned in my presentation, but I'll just recap. At present, all that we know about the application process is that it's still in progress and should be announced soon. So if they expect funds to begin flowing within 2 to 4 weeks from release of legislation, which occurred on the weekend, we're probably at the beginning of May and in the first half of May that funds will begin to flow. Presumably sometime between now and then, but it's hard to say exactly when the application process will become available. So just, I guess, keep watching, Canada.ca, as was mentioned, or the CRA directly, and I'm sure the news will be covering it as well.
Thank you, Darryl. I don't see any additional, we've just received one other question. Thank you for the information. It's been a great help. Could you advise for the WSIB payments, do we still file our WSIB and delay payment, or do we also delay filing WSIB?
Yeah, I'd still file. Same with HST. I'd still do the filing. I would just delay the payment.
Thank you, Joel.
Joel, just since you mentioned the HST piece there, I also wanted to weigh in a little bit on that. Just something for everybody to keep in mind, if you do want to take advantage of that deferral of HST payments. Keep in mind that that's not a subsidy, and that is strictly a deferral. As a business that collects HST, you're doing that. It's a trust account. You're doing that on behalf of the government. So just make sure, certainly there may be the requirement to tap into those funds to keep your business afloat. That's not a deductible expense. That's actual funds that you are going to have to provide to the government at some point, by the June 30th payment deadline. So just be aware that one is a little bit different than some of the other subsidies and support that's been announced.
Thanks, Darryl. Next question. The 10% wage subsidy is automatically calculated by our payroll provider. How do we account for that reduction paid to CRA? Is that amount taxable?
Yeah, I'll jump in. It's Joel here. It is taxable, just as Darryl said about the 75% wage subsidy, which is taxable as well. So if you think about the bookkeeping for a minute, if you're remitting less to CRA, what would happen in your books is your wage expense would be lower. Okay, so that deduction is reduced because you're not remitting all of the deductions to CRA. So your income would come up. So it is taxable. It naturally just happens that way in your financial statements.
Thanks, Joel. Also, can the 10% be applied automatically at the end of the year?
Yeah, I don't think it's automatic. My understanding of the 10% wage subsidy is you would have to ask for the subsidy to be paid out at the end of the year, or you could carry it forward to the following year to reduce source deduction remittances.
Okay. What about the CEBA for business started in January of 2020?
Yeah, I mean, the CEBA is the $40,000 interest-free loan. So again, this is one of the frustrating points here. I would say it's one of the most frustrating. If somebody had started a business in the fall and had $50,000 of wages, they seem to be in a much different position with this $40,000 loan than those who just started the business. So right now, the loan's not available for a business that started this year that doesn't have a T4 summary for 2019. When I say right now, I mean to stay tuned, because with some of my clients, we're hanging on to see if there's something we can do. We're not trying to apply and to get through the system with a menu with the bank, but we're staying tuned to see if anything changes.
Thank you, Joel. And that appears to be our last question at the moment. Oh, here we go. Regarding the 40,000 loan, with the 10,000 forgiveness repayments starting January 2nd, 2021 and paid back by December 31st, 2021. During 2021, how best to repay monthly or all in one lump sum just before December 31st, 2021?
Yeah, I see Mike sent that question. It's Joel here, so I'll answer Mike. I think this one, because it's interest-free, it still continues to be interest-free, right? So I think it really comes down to the business owner, right? I know some business owners really don't like the feeling of owing anyone anything, and they would like to just pay it off. Whereas, if you can make good use of the cash in 2021, you may want to still make use of the cash and plan to pay it later. So I think it's really going to be, the answer is going to come down to the business owner and what they can do with the funds. And keep in mind, if you do start making monthly payments so that, by the time you have to have it paid off, you're good to go. If things change, it's a revolving loan, right? So my understanding is it's like a credit line. So you could actually pull the funds back again and make use of the funds. You just need to make sure that it's paid back in full by the date that it's supposed to be paid back by, which I think is the end of 2022.
Thank you, Joel. And again, that appears at the moment to be the last of our, and again, another question coming in. Can we apply for both CEBA and the wage subsidy?
Yeah. So the question is, is there any kind of impact if the CEBA being the $40,000 interest-free loan, and the wage subsidy being really either of the 10% or 75, is there an issue if you claim one in trying to claim the other? No, they're completely separate. So you can claim you can receive the $40,000 interest-free loan, and that does not impact whether you can claim the subsidy, and vice versa.
Perfect. And the next question, for calculating the wage subsidy, the pre and post calculations, can Grant Thornton help to ensure this is completed correctly so one doesn't inadvertently make a mistake?
Yeah, I think absolutely. We can help, and whether it's from, obtaining your payroll records, and so that we can do the whole calculation for you, or just reviewing a calculation that you've prepared. Absolutely, we can help, and you can certainly reach out to any of us on the call as a starting point to help with that. Or if you have other Grant Thornton contacts, you can certainly reach out directly to them as well. Thanks for the question.
Thank you, Darryl. And unless there's other questions coming in, I think that concludes our question and answer period. So thank you again to the team at Grant Thornton. Such valuable information, very complicated environment, and you've provided clarity. So on behalf of the Chamber of Commerce, thank you so much for taking the time. I know how busy you are. Again, we will be sending this slide deck out to Chamber members, as well as others that are participating today within the next day or two. So if you have further questions, you can let us know. The Chamber of Commerce will continue to send out emails and information to try and disseminate what's happening through government programming, and we'll stay in touch. Thank you so much to Darryl, Joel, and Norie, and for everyone participating. Stay well, everyone, and have a good day.
Thank you, Kathy.
Thanks, Kathy.
Thank you, everyone.